What's up, everybody? Today is November 2nd, 2011. Wanted to say thank you. Got some thank you cards here, guys. Want to say thank you for everyone who watched the video yesterday, who left comments. Had a lot of good feedback. Wanted to say thank you to the legend, Gregory Manarino. You are the man. Thank you so much for sending out our content to your massive loyal following. Great followers, great group you have, Greg. So thank you so much. Okay, a lot of feedback. Gonna try to keep these videos at 10 minutes. Gonna do my best. So let's move through this. Okay, so today let me talk about rates. I'm a real estate guy. We have to talk about rates and the 10-year Treasury note. Okay, so today the 10-year yield, which is mostly tied to 30-year fixed mortgaged interest rates. If you go back and look at the history, overlay the charts, man, it's almost identical. It's crazy. So anyways, we look at the 10-year Treasury bond yield to be able to see where mortgage rates are headed. So today we have the 10-year yield is down to 1.538%, which is an average of the 30-year fixed mortgage of 3.17% today. The 15-year is at 2.57%, and the 30-year jumbo is at 3.14%. So historically, interest rates are pretty low. It's giving buyers more purchasing power so they can afford more home. And we're going to talk about all that on another video later this week about housing affordability and what it takes to purchase a home, the costs, etc. So we are going to talk about that. But this just came across my desk just now today. The Joe Biden administration is calling for stable coin regulation. And I quote, it's recommending Congress act promptly to enact legislation to ensure that payment stablecoins and payment tablecoin arrangements are subject to federal prudential framework on a consistent and comprehensive basis, which we are going to talk about later. One of the questions somebody had yesterday was crypto-backed mortgages, and we're going to talk about that. But first, another great question we had was real estate investment trusts. What are they? How do you invest in them? And what is it? Well, a real estate investment trust is a way, it's a stock, it's publicly traded companies, and you can invest in real estate without actually owning property and reap the rewards in the form of dividend payments. So what is a real estate investment trust, or a Reit? Well, a real estate investment trust is a company that owns, operates, or finances income-generating real estate. It's modeled after mutual funds, and REITs pool the capital of numerous investors. And what this does is it makes it possible for individual investors like you to earn dividends from real estate investments without having to buy, manage, or finance any properties yourself. Okay, and here's some key takeaways of what an REIT is. A real estate investment trust, as I just explained, is a company that owns, operates, or finances income-producing properties. REITs generate a steady income stream for investors, but offer little in the way of capital appreciation. In REITs, it's all about the dividend payments. Most REITs are publicly traded like stocks, which makes them highly liquid, unlike physical real estate investments. Okay, REITs invest in most real estate property types, including cash flow apartment buildings, anywhere from cell phone towers, data centers, hotels, medical facilities, offices, retail centers, warehouses, etc. Everything in real estate. And there's also residential portfolio REITs as well. But for these companies to qualify as a REIT, there is some regulations and rules they must play by. The company must comply with certain provisions in the Internal Revenue Service Code, or the IRC. These requirements include to primarily own income-generating real estate for the long term and distribute the income to you, the shareholder. Okay? Specifically, a company must meet the following requirements to qualify as a REIT. Must invest at least 75% of total assets in real estate, cash, or U.S. Treasuries. Derive at least 75% of gross income from rents, interest on mortgages that finance real property or real estate sales pay a minimum of 90% of taxable income in the form of shareholder dividends every year. It must be an entity that's taxable as a corporation. It must be managed by a board of directors or trustees. Must have at least 100 shareholders after its first year of existence and have no more than 50 of its shares held by 5 or less or fewer individuals. Today, it's estimated that REITs collectively own about $3 trillion in gross assets. Publicly traded equity REITs account for about $2 trillion. Okay, do your own research on real estate investments trust, and here are the top 3 this year that have paid really nice dividends. The first is Orchard Island Capital Incorporated, ticker symbol ORC. It's currently trading at $4.98 intraday. On October 28th of this year, had a dividend yield of 15.63%. How about that? What a great return, in my opinion, of course. Another one, Armor Residential Incorporated, ticker symbol ARR, ticker symbol ARR. It is trading at $10.66 intraday, has a dividend ex pay date of November 12th, 2021, with a yield of 11.16%. And the third one I will mention today is Two Harbors Investment Corporation, ticker symbol TW0, ticker symbol TW0 like 2. It's trading at $6.41 intraday on September 30th of 2021. Had a dividend yield of 10.45%. Okay, so do your own research, invest at your own risk. This is not investment advice. Do your own research. Those are real estate investment trusts. That's how you can invest in real estate without owning physical property. Okay, great question yesterday. Cryptocurrency-backed mortgages. I actually spoke with Greg about this a few weeks ago. And as I said earlier, the Joe Biden administration is calling for stablecoin regulation. It's very interesting stuff. So back in August of 2021, the second largest mortgage lender in the United States, United Wholesale Mortgage, started accepting mortgage payments in Bitcoin and a couple of other cryptocurrencies. Ticker symbol UWM, by the way. UWM became public in January via a SPAC, which is a special purpose acquisition merger, and was the first in the country to accept cryptocurrency for home loans. However, on October 15th, after a 6-week test run, United Mortgage stopped accepting cryptocurrency payment and abandoned the option entirely. And I'm going to quote what the company said in a statement, and they said, due to the current combination of incremental costs and regulatory uncertainty in the crypto space, we've concluded we aren't going to extend beyond a pilot at this time. At the time, United Mortgage allowed payments in Bitcoin, Ethereum, or Dogecoin, and the reason why they abandoned this pilot program at the end of the day was that there was a lack of demand. Moreover, how many people do you think made a mortgage payment with either Bitcoin, Ethereum, or Doge? How many do you think? A couple hundred, couple thousand? Well, the answer might be surprising to you. The answer was 6. 6 people made a mortgage payment over 6 weeks to the second largest mortgage lender in the United States. It's just not being well adopted yet. I think people are more of holding on and holding, hodling, right? They're holding their cryptocurrencies for the long-term position. They're not willing to spend it yet because it's very volatile. Okay, but this brings me back to stable coins as the Biden administration is looking to regulate them. It is my opinion that once cryptocurrency becomes more regularly adopted, I believe people will have the option of paying with a stable coin for their mortgages, because that eliminates the volatility of the coins that fluctuate in price. And we all know that that is happening very frequently. Prices are going up and down and up and down. And it's very volatile. Okay, so you will one day, in my opinion, be able to exchange your Bitcoin, Ethereum, Dash, Shiba, whatever coin, be able to trade that, exchange that for a stable coin, and use that stable coin to make your mortgage payments. I think that is going to come in the years ahead. Cryptocurrency and blockchain technology is really, really awesome. You guys should follow the one Keon. He is very well versed in cryptocurrency. And I wanted to shout out Greg again, Greg Manarino. Thank you. And to his Lions for checking out my video. I really appreciate it. Please like and subscribe to the channel. I'm going to post content every single day. Leave your comments and get my book. Get my book, Selling Secrets You Can't Afford to Miss. Everything you need to know about selling your home, how to get top dollar for it in a market that's as crazy as this one, okay? You can visit jordandove.com/books. Enter your email. You'll get a PDF link to download the book. And if you want a hard copy, I will mail one to you. Email me your address to jordan@dovenassociates.com. Thank you again for watching. I hope everyone has a healthy, safe day. Take care.